What do investment risk metrics like standard deviation mean? Imagine trying to predict how much your investment might go up or down in the future. It's not always straightforward, but understanding risk metrics can help. One of the most common tools is called standard deviation. Standard deviation measures how much an investment's returns fluctuate from its average return over time. Think of it as a way to see how wild or steady your investment might be. If the standard deviation is high, it means the returns can swing widely, which indicates higher risk. If it's low, the returns stay closer to the average, meaning less risk. Let's say you have an investment that earns an average of 10% each year. If the standard deviation is 15%, most of the time, your actual returns will be between -5% and 25%. This range shows how much your returns could vary in a typical year. To get a better picture, we often look to standard deviations. About 95% of the time, your returns will fall within this range. For example, they might be between -20% and 40%. This helps you see the possible extremes of your investment's performance. Standard deviation relies on the idea of a normal distribution, which is like a bell curve. Most returns cluster around the average, with fewer outcomes at the extremes. This statistical approach helps investors estimate how likely different return outcomes are based on past data. For students just starting out, understanding standard deviation is important because it shows how risky an investment might be compared to your comfort level. If you prefer stability, look for investments with lower standard deviations. If you're willing to take on more risk for the chance of higher returns, higher standard deviation investments might be suitable. In practical terms, knowing the standard deviation helps you build a portfolio that matches your risk tolerance. If you have a longer time to invest, you might accept more volatility because you have time to recover from losses. If you need your money sooner or want more stability, choosing investments with lower standard deviations makes sense. In summary, standard deviation is a number that tells you how much an investment's returns can vary from its average. It's a helpful way to see how risky an investment might be and to make smarter choices based on your financial goals and comfort with risk.